June 17th, 2025. At the beginning of the day, we had a gap down. I was interested to see if we would close the gap. You can see we had a bear channel, breakout below the bear channel. So I was interested to see if we would get back to the 71 low, as I thought that would be a potential target for a trading range, the top of the trading range. Bar two, neither one of these just look like pullbacks from the big gap down. Keep in mind, if you're buying the close of bar two or you're buying above bar two, imagine the big gap down is just a giant bear bar. If that's a giant bear bar, do you really want to buy above bar two? Probably not. Bears probably need another leg down. You could argue it was bar three, and then we got a complex pullback and then another leg down. 4, 5, and 6, 3-bar micro channel, tail on 4, tail on 5, strong close on 6. A decent 3-bar micro channel. It's okay to take it. I did not, because I do not trade before bar 7, but I thought it was reasonable to buy the close of bar 6. You can see a second or a third leg up, maybe 1, pullback 2, pullback 3. Some traders would argue it's 1 and then 2 down, and then it's 1, pullback 2. So either way, you're probably buying a second leg, 8, 9, but still, okay to be long. 11, 12 reversal with some follow through. Not all that great, but some traders might look to sell the pullback, maybe sell the bad high 1 above bar 12. 13 through 15, I did sell the close 15 and scale in. 16 just barely met my, definition for a 1-bar surprise against me. So I ended up getting out with a half an R. I got out about right here. If it was a little bit smaller, I would have been okay with it, but it was just a little bit too big, so I ended up exiting with 0.5 R. It obviously did hit the 1 R symmetrical second leg target on bar 18, 19, 20, and 21, 3-bar micro channel. I made a mistake. I thought that 21 closed above bar 9, so I thought it broke out. It did not. It closed at the exact high. So the mistake I made, I still would have bought the close and scaled in, but I bought the close and one of my first scale ins. I had to pause there for a second. What I said is I bought the close of 21. I thought it broke out. It did not, but I did scale in on 22. 22 wasn't quite big enough for me to start looking to exit. After 23, though, I am going to be looking to exit. Breakout and follow through 22 and 23. So I looked for a 0.5 R exit. I continued to scale in, and I got out. It was like basically a tick above the bar 26 high. So I got out up here. I did take a loss. I did lose on the trade, but it wasn't a whole bunch. 26, 27 consecutive bull bars, reversal and follow through. Had I sold the close of 24, I probably would take the 0.5 R that it gives you on 28. I'd take it right here. Simply, one of the reasons is, yes, you'd make more money on the scale-ins if you held and did the entire symmetrical second leg, but you'd get out about right. You get out about right there if you waited for the symmetrical second leg versus getting out right here and not sitting through the entire pullback and risking all that money and all of those things. So it is reasonable to continue to hold because 24 is strong enough that it should get another leg. But the rally to 21 was pretty strong as well. We do end up getting basically back to the close of bar 21. This does end up being a winning trade. Obviously, I mentioned I exited here, but if you held for the full symmetrical second leg, it gets you somewhere up here. 30, 39, so 38 and 39, strong bear bars, and 40 is follow through. It's not really all that great, the large tail on either side of 40. And then 41, another bear bar. This is the first time on 41 is the first time that any 3-bar micro channel has gotten immediate follow through today. No immediate follow through, no immediate follow through, no immediate follow through, no immediate follow through. So we have 4 separate times so far where the market has not gotten immediate follow through. So what are the odds? Something is changing, right? In general, there's a 48% chance that a 3-bar micro channel is going to get follow through. So when you get 4 consecutive times where it doesn't, and then it does, something in the market environment might be changing. Doesn't mean we're going to break out, but there's maybe a slightly increased chance of it simply because you now have 4 consecutive bear bars, and we haven't had any 4 CC patterns yet today. 42, We tried to break out below the 3 low. We were unable to close below it. So you can see we pulled back, and then the low 1 ends up working. If you're going to sell a low 1, again, it's better to sell low 1s after strong breakouts. You don't want to be taking, low 1s and high 1s in trading ranges like bar 12. 46, another 3-bar micro channel. This was a good one. I tried to sell it, but if you were watching the market, basically right when 46 closed, it opened, within a half second of the bar, it was right here. So I sold the market and I got filled down here, and I don't want to risk all that extra amount. So I basically just exited the trade for break even. But I thought it was a good one. It was just that I didn't, I sold the close as, I guess I could sell in the future, second or two before, but I just clicked sell as them. And sometimes I do sell a second or two before. It was just I guess not every time, but I clicked sell as the market closed, and it was already down here, and so I never got filled. But 48 and 49 reaches the 1R target again for the bears. I thought this was leg 2. And then 50, 51 is probably the start of leg 3. And then 52, you can see this is 3 legs down. 1, pull back 2, pull back 3. Still it's an okay signal. I don't blame anybody if they took it. But I just stayed out because it was a late leg. We had a reversal up, not very good unless it gets a bar that looks like, 56 or stronger. But not really all that great on bar 53. 54, 55, another leg down. I think that's leg 4. You could argue, it was a fresh spike, and then you can see we got the channel down 3 legs, 54, 55, 57, 59, then 62 and 63. I ended up sitting out at 57, 58, and 59 as well, just because they were late legs. If you did take 59, you had a tough choice on 61. Yes, we might need to get below 60 because it's not all that great, but 61 is a big surprise against you. So if you held and scaled in, good for you, but it's kind of hard. You're going to lose that trade enough of the time that it's difficult to hold after 61. So that's why I'm doing a lot less with late legs. I'm just trying to sit out in the late legs. But had I sold 59, I probably would have exited on 61. It's kind of difficult to hold after 3 or 4 legs down because if you get any more follow through than that, you're probably going to get stopped out and take a really large loss. I did not take 66 because I don't trade after bar 65. Just a little bit worse. Probability drops a little bit at the end of the day. So I ended up with a small loss on the day. But considering, the first 4, well, I don't count this one because I don't take that kind of trade before bar 7. But this had a surprise against it. This had a surprise against it. This had a surprise against it. This did not. This did not. I suppose this did, but basically most of the trades I took today ended up having surprises against them, which is not uncommon, but it happens about 50% of the time, slightly less. But I think I managed my trades just fine today. I ended up with a very small loss on the day. So you can see we have 4 legs up. 1, pull back 2, pull back 3, pull back, maybe 5 legs up. It doesn't really matter at this point because all the bull legs are late legs. You can call it 4 legs up, 5 legs up, however many legs up you're counting. We're not in an early leg. And so if, this should trigger, we're probably going to trigger the sell signal below that low, I would imagine. And we'll see if there's sellers there. The bears are looking to get a bar that looks exactly like this June 17th bar on June 18th. They want the bar to look exactly the same. And if they get that, odds are we're probably going to go lower. Should get at least a second piece down, and we'll probably, break. We have a few trend lines here, but this is still a trend line, so we might get down to here and break the trend line, and then start to go sideways. Probably not the start of a large bear move. The best the bears could do is probably the bottom of the trading range, which is down here, 57, 56. But they have a lot of work to do before they get down there. The weekly chart. And I don't need to go over this yet. It's only Tuesday. But all right, that's it for this video.